Hello everyone and welcome to the YouTube channel of Being ACCA. This is Tushita Gupta, ACCA affiliate, and in this video we are going to be continuing our journey through the examiner reports that are available on the ACCA website. So in this video, March-June 23 examiner report is being discussed. So let's get started. I'm just going to share my screen. And here we have the video, the PDF. Just adjusting my video size so that whatever I speak is also visible to you. Perfect. So let's get started. We have the PM March-June 23 examiners report with us. So in the report, we have been going through the section A and section B questions that are there in the examiner reports. We'll be following the same format. And for section C, we will be having separate videos because these are on practice platform. So let's get started. So with this, we begin with the first question of the section A. So I can see that the question is asking me about shadow prices. So first of all, it's very important that we understand what shadow prices really are, what is the concept, and what does shadow price really mean. So trying to find some empty space. Okay, let's discuss it over here. So talking about shadow prices, the word shadow price is used. So basically, it is the maximum extra over and above the normal price that an organization will be willing to pay. Pay emphasis on my words, maximum extra over and above the normal price that an organization is willing to pay for an extra unit of the scarce resource. Shadow prices will always be talked about for the scarce resources. For the scarce resource, for one additional unit of the scarce resource, how much extra over and above the normal price, is the organization willing to pay for the additional unit, one additional unit of the scarce resource. So this is what shadow price means. So in other words, if I try to put it, it is the additional contribution that you are earning because of this one extra unit of the scarce resource which you have employed. So let's suppose in my manufacturing environment, if let's suppose direct material is the scarce resource, and if I get one more unit of raw material, how much additional contribution will I be able to generate is going to be my shadow price. So right. So with this, we have understood what shadow price really means. And now let's have a look at the requirements. So also one thing to note is that, probably if there's one resource which is not scarce, which I have an abundant quantity and it's even more than what I actually need, so then that resource is not going to give me any extra contribution. And we just learned that shadow price can also be called as the additional contribution we earn for employing that one additional scarce resource. So if that resource is not scarce, if I have it more than the quantity that I need it for, so then there will be no shadow price for that, because I will not be paying anything extra over and above the normal price, because I'm not getting anything extra because of employing that resource. So this is how the concept of shadow price works. Now let's have a look at the statements that are given. So the first statement says, if demand and labor hours are the constraints at the optimum solution, both will have a shadow price of 0. So see, if your demand and labor hours are constraints at the optimum solution, So if they are at present at the optimum solution, they are the resources which are limited for you. Both the demand and the labor hours are in limited quantity. So whichever resource is in a limited quantity will always have a shadow price, and it will not have a shadow price of 0. That is why this is crossed out. Again, let's discuss why they will not have a shadow price of 0, because if these are the constraints at the optimum solution, so optimum solution is the point where I'm maximizing the profit. So at my profit maximization, if these two resources are the constraints, are the limiting factors, then I will have to have a shadow price for them, because if I lose out on one, or if I gain one more unit of these limited resources, I will be able to have some additional contribution, and that additional contribution that I'm earning will be my shadow price, because that is the maximum amount of money that I will be willing to pay over and above the normal price of these two resources, which is demand and labor hours. So that is why A statement gets crossed out. Talking about the statement B, the shadow price is the maximum amount a company will pay for one more extra unit of a scarce resource. Now, this statement, be very careful. This looks true at the first instance, but so this says that your shadow price is the maximum amount the company will pay for one resource. However, like we just studied, that shadow price is something the extra over and above the normal price that the company will be paying. So the shadow price is not your maximum amount that the company will pay. In fact, shadow price is the maximum additional a company will be willing to pay for the one more unit of a scarce resource. So that is why this statement is also wrong. Coming to now, we have to select two of the following statements. So that means C and D have to be correct. Now let's understand why C and D are correct. So if a resource has a shadow price greater than 0, which mean, like I told you, that the resources which you have in abundance more than what you need, they will not have any shadow price. Their shadow price will be 0. So if the resource has a shadow price greater than 0, obtaining one more unit of that resource will alter the optimum solution. So if probably my labor is my constraint, and I can employ one more labor, so my profit will increase because I will have additional contribution, and because I will have additional contribution, my optimum solution will also be increased by that amount of additional contribution. That's why statement C is correct. Moving on to statement D, a resource which is critical to the optimum solution cannot have a 0 shadow price. Like I told you, if my labor is important, labor is the restricting factor, labor is something which I have in a limited quantity, it is my constraint. So if that resource becomes important, critical to my optimum solution. So if that resource, one more unit will give me additional contribution, so that is why it will never have a 0 shadow price. The shadow price will be the additional contribution that I get by employing one more unit of labor. So that is why statement D is also correct. Moving on to okay, so here all the statements have also been explained. So you can go through this explanation and probably ask any of the doubts that you have going through these explanations. Moving on to the example 2. So in example 2, we have to calculate it's a numerical one, a standard full cost per unit of product X to 2 decimal places. Please pay attention to the rounding of instructions, because section A and B are completely computer marked. So that is why it is very important to identify the right format for attempting your answer. And please note all of these rounding of instructions very carefully. So we have to find out the standard full cost per unit of product X. So let's have a look at the question. The company makes product M, and to meet the demand of 2000 units, it has budgeted to use the following resources per unit of product X. So to make one X, which we have to find out over here, material A is this much, B is this much, labor, we have variable overheads, and we have fixed overheads. So this is a relatively easy question. I don't understand what it's doing in the examiner's report if it's an easy one. So let's start solving this. So for the standard full cost, what are we going to need? First of all the materials. So it is mentioned that material A, we need 1.2 kg at 10 per kg. So 1.2 into 10 gives me 12. Let me leave some gaps so that you can differentiate between the calculations and the answer. And then material B is 1.3 kg at 9 per kg. So 1.3 multiplied by 9, this gives me 1170. Then I have my labor. My labor is 2.5 hours at 15 per hour. So labor is 2.5 hours at 15 per hour. This will give me 3750. Now this is all about the materials and labor that are covered in this box. Now let's read it further. Variable overheads are allocated at the rate of 5 per kg of the material B used. So if I am using material B 1 kg, then $5 will be apportioned. Now I am using 1.3 kg, so I will multiply 5 with 1.3 to obtain how much of my variable overheads have to be allocated to the product X. So I'm going to take over here. So these are my variable overheads. So I have with me 5 is the rate, and how much of material B are we using? We are using 1.3 kg of material B. So 1.3 multiplied by 5 gives me 650. So this is about my variable overheads. Now I will take my fixed ones also, because I have to calculate the standard full cost. Full cost will include everything. So when it comes to the fixed overheads are $80,000 and absorbed on the basis of the quantity of material A which is used. So I can see that the material A is 1.2 kg per unit, and we are making 2000 units in total. So what I will do to find out my fixed ones is that fixed overheads. So when it comes to that, the total cost is 80,000. I see that the total cost is 80,000. And then how much of material A have we used in totality? So in totality, we have produced 2000 units of X, and every unit of X is taking 1.2 kg of material A. So I will take 1.2 multiplied by 2000. This will give me 2400. Now this is the per dollar that I have to fixed overheads that I have to allocate for every 1 kg of my material A. Now every unit is using 1.2, so this will give me my per unit cost, which will come out to be 40, and then I will simply just let me run the calculation once. So 80,000 divided by 2400 will give me 33.33. So this is the cost that I have to apportion for like 1 kg of material A being used. Now 1 unit of product X uses 1.2 kgs of material A. So I will take 33.33 and multiply that by the quantity of material A that I'm using in every product, which is 1.2. So 33.33 multiplied by 1.2 gives me 40. So 40 is the portion of the fixed overheads that I'm going to be charging. Yeah, so this is what I'm going to be charging. So these are my fixed overheads. Now I will add all of these up: 12, 1170, 3750, 650, and 40 to obtain my standard full cost. And if you add all of these figures, you will get the final answer of 107.70. You can also have a look at the explanation and the solution given in the examiner's report. And they have here calculated simply by finding 40 straight away by dividing by doing the calculation of 80,000 divided by 2000. This will also give you 40 per unit, which we worked out using this method. This multiplied by 1.2, because that's the quantity of material A that we are using per unit. So both of these methods will be correct and will give you the same answer. Moving on to question number 3 now. So Gray Company has two divisions, Division A and Division B. Division A manufactures component T500, which it sells to Division B and to external customers. Division A has an annual capacity to produce 20,000 units of component T500 and has estimated external sales of 12,000 units of component T500 for the current year. So from all the information that I have read so far, I can understand that this pertains to transfer pricing, and there are two divisions in the company. One division has the capacity, so it has the capacity of 20,000 units, and the thing that it is selling externally, so the external sales it can probably do is 12,000 units. That means I have a spare capacity of the difference, which is 20,000 is my total capacity, 12,000 I'm going to be selling externally into the market. So that means I have 20 minus 12, 8,000 spare capacity, which I can probably sell to my internal division B. Now, each unit of component T500 costs $20 to make, made up of $15 of my variable costs and $5 of my fixed costs. Now, division A is selling these components for to the external people for $22 each. And now my requirement is that division B is going to need 14,000 units in the current year. Now, what the requirement wants me to do is, assuming that the decisions are made in the best interests of the company. So the best interests of the company will always be fair to both of these decisions, because ultimately they are going to be for the company as a whole, keeping in mind the profitability of the company as a whole. What is the minimum total cost? Total is the word which is highlighted over here, which means we have to find out the total, supreme total cost which division B would expect to pay to division A for supplies of component for the current year. To the nearest whole dollar, we have to give our answer. Now, first of all, the spare capacity of 8,000, I have absolutely no problem in giving my 8,000 spare units to the division B, because either ways I do have a capacity of 20,000, but I'm only able to sell 12,000 in the external market. So the 8,000 which I'm currently having extra with me, that is something which I can be able to give it at my variable cost, while I am selling it for 22 in the external market. For my fixed costs get recovered in selling these 12,000 units to the external market. So that is why for the 8,000 which I have spare with me, I'm only going to charge them 15, because that is my variable cost. My fixed costs are anyway recovered because of supplying the 12,000 units externally for $22 each. So the total bill, if I have to calculate for division B, so division B, first of all, they will be able to procure 8,000 units at the rate of 15 per unit. So multiplied by 15, this will give me 120,000. Now, when it comes, my total requirement is 14,000 units. I have only been able to secure 8,000 as of yet. So the difference of 14 minus 8, 6,000 is something which I need more. I still need 6,000 more units for my division B. So now, because they have given me all of the units from this spare capacity, the 8,000 units which they had extra, now if I buy 6,000 from them more, so it will be a loss making thing for the company, because the company can sell the 6,000 units at 22 in the external market. So if I have to buy more, they will be giving me these more units out of this 12,000, and this 12,000 the company makes a profit by selling them at 22 in the external market. So if I want to buy 6,000 more, they will have to give to me at 22 per unit, because this is the amount that they would have otherwise also gotten from the external market, and we have to make it according to the best interest of the company. So that is why 6,000 units I will be able to procure at 22 only. So with this, I will have my answer as 132,000, and if you add both of these figures, the total of this will give you your answer 252, and this is the answer. Moving on to the next one. So this is again a theoretical question. We have to tell which two of the following statements are consistent with the theory of constraints. So now let's understand what the theory of constraints says. So that according to the theory of constraints, there are a lot of like assumptions, a lot of things that it suggests. So theory of constraints basically talks about maximizing, optimizing the use of your bottleneck. It will suggest you everything that you can do to optimize your use of the bottleneck, because bottleneck is something which you have in a limited quantity. So let's read the statements and understand which of them are correct and which of them are wrong. So there should be a small amount of buffer inventory held prior to the bottleneck. Now this statement is absolutely correct. Why does theory of constraints say that? So the theory of constraints says that we have to optimize using our bottleneck. That is the resource which we have in very limited quantity, and we have to make the production process in such a manner that we are always having something extra for the bottleneck, just so that if there is, like, in a moment, if I find that there is some spare capacity at the bottleneck, I can bring in my buffer inventory and use the bottleneck to the optimal level. So that is why this line is consistent with the theory of constraints. Theory of constraints will always suggest you that keep a small, not a, like a big amount of buffer inventory, but a small amount of buffer inventory prior to the bottleneck, so that the bottleneck will never be allowed to, you know, bottleneck will always be working up and running. It will never be vacant, because it is something which we have in limited quantity. So the bottleneck never has to be slowed down or delayed. So that's why statement A is correct. Now talking about statement B, raw materials should be converted into sales as slowly as possible. No, this is wrong, because raw materials should be converted into sales as quickly as possible. For any business, if you are converting raw materials quickly into sales, that means until you are at the raw materials and the production stage, you're only spending money. It is only with sales that money comes in. So it should rather be quickly. Why? Because according to the theory of constraints, how quickly you move the raw material to the sales, higher will be your throughput and higher will be your throughput accounting ratio. So this is why this statement is wrong. Moving on to the next one, operations prior to the bottleneck should operate at a faster level than the bottleneck. So this statement is also incorrect. Why? Because your operations, even if they operate at a faster level, the bottleneck is going to slow it down. So your operations prior to the bottleneck should also operate at the same speed as the bottleneck, so that your bottleneck is used to the optimum level. It is very important to optimize the use of the bottleneck. Again and again, when it comes to theory of constraints, it will always emphasize on the optimum utilization of the bottleneck. Optimum use or utilization of the bottleneck. So this is what the entire objective of the theory of constraints is, that the bottleneck resource which we have, that has to be used to the most optimum level. So that is why this statement is also wrong. Now coming to statement D, conversion costs and investment costs are kept to a minimum. Definitely yes, because the lower that these costs remain, conversion costs and investment costs, the higher is going to be your throughput accounting ratio, and the theory of constraints suggests that we have to have a higher throughput accounting ratio. So with this, we have done the section A questions that were given. Now we will get to section B. So we have the case study given to us, and there will be 5 questions that are asked regarding this. So we have to calculate for 20x1 the forecasted weighted average CS ratio for the rackets company. So let me go to the data that they have provided. Let's first read the scenario also. Rackets company is based in the country of Eastland and currently makes and sells rackets for children for 3 different sports: badminton, tennis, and squash. The company has been recently trying to forecast the expected sales and costs for the next 3 years. Sales demand for 20x1 is expected to be in the ratio of 4:2:1. Now we have to find out the weighted average CS ratio. So the ratio is important to us, because that is how we will be assigning them weights. So I see some empty space over here. So this is about the badminton rackets, this is about the tennis rackets, and this is about the squash rackets. So we have the ratio or the sales mix. So the sales mix is 4:2:1. Now we have to find, for the contribution to sales ratio, we need to find the contribution, and the second thing that we need is the sales. So let's see how much contribution are we earning. So I can see that my sales price is given to be 21 and my variable cost is given to be 11. So the difference, because the contribution is nothing but the difference between the sales price and your variable costs, contribution is SP minus VC. So with this, I can find out that this will be 10, this will be 15, and this will be 8. So I have my contribution 10, 15, and 8. Now I will find out how much is the total contribution that I'm going to be earning according to the sales mix. So according to the sales mix, I'm going to be selling four in the ratio of 4 is to 2 is to 1. So I'm going to multiply both of these together to obtain my total contribution. So if I'm probably selling in a fixed quantity, if I'm selling 7 products, so 40 will be earned from badminton, 30 will be earned from tennis, and 8 will be earned from my squash rackets. So this is how I will be earning my contribution. Now I need to find my revenue. So my revenue also can be found out by multiplying the sales price with the sales mix quantity. So I have my sales price, which is 21, 30, and 24. These are my sales price, and if I find out my total revenue, if I am probably selling just a total of 7 units, which will be 4 badminton rackets, 2 tennis rackets, and 1 squash racket, so my total revenue will be nothing but 21 multiplied by my sales mix. So this will give me 84, this will give me 60, and this will give me 24. Now my CS ratio is almost done. So for my CS ratio, I need my total sales and I need my total contribution. So my total contribution is 40 plus 30 plus 8, which will be 78. This is my numerator. Now my total revenue is 84 plus 60 plus 24. This gives me 168. So now I can find my CS ratio. My CS ratio is nothing but 78 divided by 168 multiplied by 100. So this will give me in a percentage form, and this calculation will come out to be 46.4%, which is also the answer given in the report. Moving on to the next question that we have. So here they have also explained the distractors, why probably you would have thought that the other options were correct, but they were not. So go through this also. Then let's have a look at question number 2. In 20x2, assuming that the rackets are sold in a constant sales mix based on a budgeted sales volume ratio, what is the sales revenue that it needs to achieve in order to break even? So I can see in the options that they're only selling badminton and tennis in 20x2. Let's have a look at the scenario as well. So I can see that the tennis foundation, funded partly by the government, is planning an investment in the sport in order to encourage more children to take up tennis. This funding will lead to an increased number of tennis facilities being available in 20x2 and a corresponding rise in the sale of tennis rackets. So the sales volume ratio is expected to be 3:5 for badminton and tennis rackets respectively, with the weighted average contribution ratio also given to us. The CS ratio is given to us for this year, and they have budgeted to sell badminton rackets for 22 per unit and the tennis rackets for 32, and the fixed costs are also provided. Now we have to find out our according to the requirement, we have to find out the break even, how many number of units we need to sell in order to break even. So first of all, it's very important to understand, go through like the conceptual knowledge of break even. Break even is always where your fixed costs are being covered. You are making enough sales to cover at least your fixed costs. So your fixed costs are given to us as 604750. So this is the fixed cost that we have, and we are going to have a contribution to sales ratio of 52.21%. So if I divide this by 52.21%, this will give me my sales that I have to do. So my sales, if you work this calculation out, you will get it as 1158303. So this is the amount of sales that you need to do. Now the sales mix is already given to us, that 3:5 will be the ratio. So the sales mix for your badminton and tennis, so 3 for badminton and 5 for tennis. This is the sales mix that we have. Now let's see how much the revenue is. So the prices are also given, the selling prices. Badminton rackets are 22 and your tennis rackets are 32. So 22 and 32. Now, if I find out my total revenue according to the sales mix, weighting it according to the sales mix, 22 into 3 gives me 66 and 32 into 5 gives me 160. So my total revenue is going to be the sum of these two, 66 plus 160. This will give me 226. This is the total revenue that I'm going to be making. Now I have to find out how many number of units that I need to sell. So in order to find how many number of units I need to sell, so we will work this out by, now we have like how much we are going to be earning. So this is how we calculated 226. The same has been performed over here. And now I just have to apportion that like out of my total revenue. So let's suppose my total revenue, which we calculated 1158. Where did it go? Here. So if I have to work this out, 1158303, and I will multiply this by 66 for my badminton racket, 66 by 226, and for my tennis rackets, this is going to be 1158303 multiplied by 160 divided by 226. With this, I will be able to calculate my revenue, and according to the rounding off instructions, you have to round your answer also to the nearest thousands. On working out these calculations, you will get option A as your answer. Moving on to the next question. Question number 3, assuming that the rackets are sold in a constant sales mix. So a sales mix is constant based on the budgeted sales volume ratio. What is the total sales revenue rackets company needs to achieve in order to make a profit of 450, 800? Now we will perform the same calculation. We just have to find out the revenue over here. So what we need, earlier we were just covering our fixed costs. In question number 2, we had calculated the revenue that we needed according to just the fixed costs, which were this much. Now we have to cover these fixed costs plus make a profit. So how am I going to form my answer over here? So my answer is going to be the fixed cost, which is 604750, plus the profit that I'm aiming at, which is 450800, and then I will divide this by my weighted average contribution ratio again, which they say remains constant. So if I say 52.21%, this was the ratio, 52.21%. So if I divide this, I will be able to arrive at my revenue, and this calculation will give me 2021739. And if I round this off to the nearest thousand, I will take it to, since this is more than 500, so I will bring it to the next thousand. So this will be 2022000, which is option D. This is how we arrive at the answer for question number 3. Moving on to the next one. Based on the profit volume graph for 20x3, which of the following statements are true? So let's first have a look at the graph. So this is the graph that we have. I can see that over here is my cumulative profit, over here is my cumulative sales revenue, and here this line is for my badminton rackets and this line over here is for my tennis rackets. So let's have a look at the statements once. So the first statement says the CS ratio of badminton rackets is higher than the CS ratio of tennis rackets. So first of all, let's understand that when we see over here that our graph is a bow-shaped graph. Have you seen a bow? A bow will, my drawing is very pathetic, please spare me for that. But a bow will always look something like this. So I can see that the graph is a little bit in the bow shaped. So if this is like a better representation of the bow. So I can see that there are some slants and curves making it like a bow shape. So whenever you have a graph looking like a bow, it'll always be using the most profitable thing first. And because the higher your contribution ratio, the contribution to sales ratio, higher is going to be the slope. So that is why with this graph, we can see that in fact, it is not the CS ratio is not higher for in fact, the CS ratio is higher for the badminton ones instead of the tennis ones. So that is why statement 1 is wrong. Moving on, if the rackets are sold in a constant mix, the break even is approximately 1300 000. So let's go back to the graph. So according to, to find out where the break even lies, you just have to see that where is the graph, where is the line intersecting your axis y. So this is your y axis, this one is your y axis, and I can see that the line is intersecting your x-axis at this point, and this point happens to be 1080. So this exactly is your break-even point, and that is why this statement is correct. Then moving on to the total contribution for 20x0 is approximately 740,000. Now let's have a look at this also. It says that your total contribution for 20x3 should be 740,000. Let's go back to the graph. So going back to the graph, also it just occurred to me that 1080 is the point that this line crosses, but we have to see that where this line is crossing. So this line is crossing at approximately 1300, and that is why your this statement is correct. Yeah, now we were looking at the total contribution for 20x3. So let's see where the contribution line is. So we can see that the this axis represents your revenue, and this the vertical axis represents your cumulative profit or loss. So with this, we can see that the number that they are saying, 740,000, is not so 740,000 is something which lies over here. So this is your profit and not your contribution. So that is why this statement is wrong. We can see that this axis is plotting profits. So this point over here is profits and not the contribution. That's why your third statement becomes the wrong one. Now moving to the fourth one, fixed costs are approximately 600,000. So let's have a look. Fixed costs will always be like the intersection of both of these lines at the y-axis. So at the y-axis, this one is the y-axis. So at my y-axis, I can see that the intersection of both of these lines is at the point where 600,000 is written. So this is where you have your fixed cost. So this is something that you have to cover in order to break even. So this is the point where you break even. So this statement is also correct, and this makes your answer as 2 and 4. So option B is the correct answer. I think, yes, we are left with the one last question of this case study. And this question says, which of the following facts about Racket's company mean that the use of CVP analysis is limited for planning and decision making? Pay emphasis on the word limited. That means we have to pick the statements which highlight the limitations of the CVP analysis. So let's read the first statement. Racket's company will give discounts on sale prices at the badminton championship event. So when we talk about the CVP analysis, the CVP analysis assumes that the selling prices are going to be the same. And when such an assumption is being made, and we know that this company is going to be giving discounts on the sales price, that means using CVP analysis makes this point a limitation, because the selling price is not going to remain the same. So that's why this statement is indeed making the use of CVP analysis limited, because this is an assumption which CVP makes, and this is something which will be violated. That's why CVP analysis is of limited use to this company. Now, every 6 months, the tennis and badminton rackets are redesigned and given a new model name. Now, this statement is also correct. Why? Because CVP analysis not only assumes that the selling prices will remain constant, but also assumes that the variable costs are remaining constant. And when these rackets are being redesigned every 6 months, that means there are going to be fluctuations in the variable costs also, probably adding some features, deleting some features. This is going to make changes in the variable costs. And this is again a thing which means that the CVP analysis, the use of CVP analysis is limited for Racket's company. Moving on to the third statement, all of Racket company's costs are either fixed costs or variable costs, and there are no semi-variable costs. So this CVP analysis also has an assumption that all of your costs will either be fixed or be variable. There will be no semi-variable costs. So this does not limit the use of CVP analysis. This in fact supports the use. So that is why this statement is not going to be our answer, although this statement is true. So we have to only pick out those statements which will limit the use of CVP. So those will only be 1 and 2. That's why 1 and 2 only is your answer. With this, we have come to an end to discussing the section A and section B of your March June 23 examiners report. And stay tuned for more videos which are coming up covering questions from more examiner reports. I hope that this was useful, and thank you so much for watching this video. Bye-bye.